Hi everyone, let's look at my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the more bearish scenario where we are looking for a 5-wave move to the downside in a wave A or 1, followed by a 3-wave structure in a wave B or 2, and then now continuation to the downside in a wave C or a wave 3. A wave 3 basically means that price is going to be very impulsive to the downside, very vertical with volume increasing, while if this is a wave C, you don't expect it to be as vertical, and also the volume should be quite similar to a wave A or maybe even less than a wave A. Now in this scenario, if we then look at the corrective structure, which is very complex that we had over the past couple of days, the correction might be finished over here with the blue wave Y being in. So in this scenario, we then have a 3-wave structure in a wave W, 3 waves in X, and then looking for this to be the final 3-wave structure in then this wave Y, for then now an impulsive move to the downside. So if this now is an impulsive move to the downside, the invalidation of this scenario basically moves to the high of this wave Y over here. We didn't reach the high over here of wave W. We now have a bit of a double top between this one and this one. We also didn't reach the double top that we had over here, and the target box is still untapped between 30.2k and 30.4k. So that is at least something to take into account. In case price does move to the upside, we might have to move B and 2 to the new high that's being made, but the overall invalidation of this scenario will be taking the high over here. So even if price is going to find its way up once more and then goes down, still the invalidation, the main invalidation, is going to be the high over here. But if we now expect an impulsive move to the downside, the invalidation is going to be up here at 29, or about basically 30k really. And then if we look to the downside, the target for a wave C as it stands now is between the 1 and the 1.236 over here, which is between 25.9k and 25k. So this target area has a bit of confluence or almost confluence with my yellow target box that I have over here, which is between 24.850 and 24.3k. So of course, if this is going to be an A, B, and then eventually a C to the downside, then price might wick into the target box but still close or range inside the target area for a wave C. Of course, if this is a wave 1 followed by a wave 2 and then a 3 to the downside, you expect much lower prices and this target box definitely not to hold. But in a wave C, you expect this to be more like a 3-wave structure where this target box will hold, and then eventually we have some sort of structure to the upside, either in an impulse or another corrective structure for a bigger correction overall. Now, if you then look at the CVD, we currently have, as price stands now, a higher low, right? We have this low over here, price making a higher low. But as you can see on the CVD lines, both of them are making a lower low. So we do have bullish divergences. However, we already had bullish divergences between this low and this low over here, and these played out because we took the high, and that is the main thing. We had bullish divergence between this and this, with the main target then being taking this high, which has been done. Now price is moving with volume to the downside, and then usually I don't really like the CVD divergence anymore. Like, of course it could play out, but I prefer to now see more local bullish divergences. So instead of looking at this low and then this low now, I would like price to have a bit of a bounce, come back with a retracement, build bullish divergences over here before then having a potential setup to the long side, right? Because now price is moving to the downside and also volume is increasing. So trying to long now, thinking these are bullish divergences, which they are, but based on like trading experience, I suppose it's not the best case scenario because we already had bullish divergences playing out. Price is moving down. Yep, we still got some divergences, but with the volume to the downside, I prefer to wait for a clear bounce, retracement, divs, and then eventually to the upside, right? So that being said, let's move to this scenario where actually first I want to go into the trading scenario that we had yesterday. So in this trading scenario, yesterday we were expecting a move to the upside, also again based on some Elliott Wave knowledge, of course, and the bullish divergences that we had between also this low over here and the higher lows that we had. So we not only had bullish divergences between these two lows, but also eventually with a bounce between this one. And that gave the trading setup as well based on Elliott Wave knowledge, where we were possibly looking at a triangle at that moment in time where entries could be done in this area over here, but the divergences played out locally, these ones, if this high is taken, which it did, and then more overall, as I just mentioned, between the low and the low over here, it's if this high is taken. Now both of these have been taken, so that was actually very, very nice. As you can see, price moved above this high. It basically took the high over here with a little bit of a wick, then moved down, went up. And this is important because once it started to move down, and let me go to the 15, you can see we also had bearish divergences on the 15-minute over here. So price moved to the downside, went back up, creating a lower high in price. But as you can see here, the yellow line, it created a higher high on the CVD, some bearish divergences for eventually a move to the downside. So of course, once this high actually is taken, the stop loss of this move should be at least break even. So this can never be a loss anymore. And also based on Elliott Wave knowledge, if you see volume increasing to the upside, then eventually you don't want to see price move below this low anymore. Eventually, if this is the highest volume move, you want to see if this is an impulse, a wave 4, and then another move to the upside in a wave 5, where the volume of this wave 5 will be lower. So that's what to look for, right? When you see a high impact or a high volume move, you will eventually want to see price ranging, creating another high, but then with lower volume. As long as that doesn't happen, the stop loss is below the highest volume move. So it should be basically here. So maybe a little bit of profit in this scenario, but it should never be a loss anymore in this particular scenario. So yeah, then eventually you either get stopped out or you have a bit of profit, all nice, all good. But if we then look at this more bullish scenario overall, removing now the explanation of the trading setup that we had, we are basically looking for more upside and potentially then an ABC still. So this being a 3-wave move then instead of a 5-wave move, with this then being some sort of an ABC or WXY, it's very difficult to actually make it a 3-wave count, but it's still a bullish scenario, right? Where this is a 3-wave structure. Then we have this as a wave A. Then we are looking at this to be a 3-wave structure before then continuation to the upside in a wave B. Now, if we do move to the upside and not take these lows over here, or actually mainly the low of A, then a target area that I keep my eye on is between the 1.236 and the 1.38, which is between 32K and 32.7K, which also includes the 2022 range highs. And there's definitely some liquidity above these highs for maybe a bit of a wick, and then eventually taking the liquidity for a continuation to the downside in an impulsive structure, as we are now looking at an A, B, C expanding flat, which is a 3, and then eventually a 5-wave structure to the downside. So this is definitely something to keep in mind. It's just a bullish scenario because we expect price to move to the upside now instead of course, locally to the downside. But I do think it is important to keep this scenario in mind as well. I hope this video was helpful and valuable to you. Please check out the macro and the high time frames video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.